Hello and welcome to the Dental Education Podcast, the podcast series where we share knowledge and experience to provide value to you and your dental practice. I'm your host, Phil Cole, and in today's episode, we're going to be talking about insurances, both personal and business, retirement plans, and I have the privilege of being joined by Shawn Johnson of Treloar Heisel, who will be sharing his thoughts and answering some questions that we have for him. So welcome, and thanks for being on, Shawn.
Oh, thanks, Phil. Happy to be here.
So tell me a little bit about, first of all, your company, and give us just a little bit of background and on that.
Yeah, great. Love to talk about Treloar Heisel. I've been with our firm for nearly 25 years now, and Treloar Heisel was like the original niche company back in '59. The whole company originated because orthodontists wanted to have a disability insurance plan designed for their national association. So we were laser focused on dental specialty from day one. Since that time, we've now become the partner of 6 national dental specialty associations. We have over 27,000 dentists and physicians as clients, and we help them on a national basis, no matter where they work, play, and live. We help them with their personal insurances like disability, life insurance, long-term care, home auto, all those type of things. Their business insurances, malpractice insurance, if they open a business, all their business package, workers' comp, data breach, buy sales if they have partners. But the core of what we do is always from a financial planning perspective. We're very concerned about the whole picture and all these recommendations. So we have a very robust wealth management and financial planning division where we can help the doctors install a retirement plan, for example, in their practice, as well as outside investments. But really, our heart is helping them create a process to help them reach their goals through the financial planning process. So those are the areas that we can help dentists and physicians. And I think that just with our laser focus, we are best in class. That's what we do. We research everything that's available in the marketplace in all those different areas and try to bring best in class solutions to the niche markets of dentistry and medicine.
So, I mean, you named off a bunch, and I know that when I've talked to when we're dealing with transitions and buyers and sellers and so forth, that we a lot of times I run into like insurance companies will only do so much. I mean, you basically, is there any ones that you don't do? I mean, because I know malpractice is always one of those things that when we were talking earlier, that is a kind of you always got to go somewhere else for that, and you can't normally get that into under one hood. I mean, you guys basically cover everything under one hood, right?
Yeah, in my industry, typically you're like a life and health specialist, so you have your license to do, the life and disability type of stuff. Are you're a property and casualty, a P&C specialist, so you really just do the malpractice. Sometimes you do malpractice and business insurances, or you're, a generalist in wealth management, right? So it's very unusual to have it all under one house, and that's really where we pride ourselves is that we can have a one-stop white glove service to tie all these services and solutions into one relationship, and that really resonates with people.
Right. Okay, so I have a dentist. We have our buyer advocate program, of course, and so when we're dealing with the buyers and stuff, they're looking into all kinds of different things, and of course, when the banks say that they have to, depend on the bank, got to get some insurance and stuff, that it just prompts the question to come out. And so I guess we'll start with that first question is what do you want dentists and medical doctors when it comes to buying or starting up their first practice, whether it be a startup or buying a practice that's already in existence? What do you feel are the insurances? I know I got my opinions, but what are your opinions on what insurances that they really should have when starting their brand new practice?
I mean, presumably they're taking a loan, right? So the lender is going to require certain insurances for approval. And really, the way I'd like to explain it is there's two areas that we need to be worried about from an insurance perspective. One is insuring the doctor, right? Because the doctor is and dentist, they're creating the income to pay back the loan. So banks are concerned about that, and you should be as well, because if you can't work, the debt still needs to be repaid in some way. And the other part is the business insurances, like for the property or for your employees, those type of things. So banks will typically say, hey, in order to provide you approval, we may need a life insurance policy assigned,
Mhm.
right? We need at least proof of disability insurance as a minimum. And then on the property and casualty, the business side, they're going to say we want to make sure you have malpractice or professional liability in force, right? And then we want to make sure that you have a business owner's policy, which is basically like a homeowner's policy for your business. Fire damage, water damage, liability insurance, general liability insurance in there. But there's also features like what happens if I get sued by an employee? So there's
Mhm.
employment practice liability. What happens if my data somehow is accessed or I have a ransomware situation? So there's cyber and data breach in there, and there's workers' compensation in there as well. So that's the basic package that a bank is going to say, check all these boxes. I would say if I separate those again and talk just on the life and disability side, you have your personal disability, at least you
Mhm.
should, to protect your income, right? That's going to replace what you're using to buy a lifestyle for yourself and your family, right? The
Right.
last thing you want to do is assign that to a loan for the bank. Now they may accept it, but you're taking on another loan. It could be $500,000 to $1 million or more. So the payment could be 6, 7,000 to what? 11, 12,000. Who knows in that range? And if all you have is your personal disability, you become disabled, and that needs to go to the bank. What are you going to live on, right?
Right.
So suggestion is always make sure you keep your personal disability for your personal use and don't have it collaterally assigned or somehow in danger of the bank having first dibs on it. Same thing with life insurance. I'd really like to keep your personal life insurance for your personal use, and you get a really inexpensive term life policy for the amount of your loan. And with that, you make a loved one your beneficiary, and you do a collateral assignment so that if you were to pass away, the bank only gets what's owed to them, right? So those are the two things I would say is you want to make sure you keep the personal. On a disability side, there's two things that you want to consider. One is there's business loan protection disability insurance. This says if you become disabled, it'll pay your monthly obligation back on the loan. And the other one is business overhead expense disability insurance. And that has to do with the costs of running that practice. You basically are the production line, right? If you're not
Right.
there, a lot of the revenue is going to dry up. But we all know in this day and age how hard it is to attract and retain employees, right? So if
Yeah.
you become disabled, you want to have a policy in force to pay for your office expenses, keep all your key people employed because you're hoping to get back as soon as possible, right?
Right.
So those are the three things: personal disability to take care of your personal lifestyle, business loan protection disability that'll pay back your monthly obligation on the loan until you're able to return or if you need to sell, and then business overhead to pay all the office expenses and retain key staff and pay not put yourself in the hole while you're out and trying to get back, right? So that's the life and disability side. And then on the property and casualty, I would say the bank's going to tell you the minimum that you have to have, right,
Right.
for all your different coverages. That's one of the biggest mistakes is don't just do the minimum. Really look at it and say, okay, for malpractice insurance, what kind of procedures am I doing? Am I working with patients that are under general anesthesia, and is that higher risk? So what should my limits be? The bank wants me to have for my business owner's policy $500,000 of coverage or 300,000, but how much would it really cost to replace my office if there was a fire or a complete loss, right?
Right.
And then the bank doesn't even suggest typically how much data breach you should have for cyber protection. or how much employment practice liability insurance you should have. And typically on a base policy, you might have between $10,000 to $50,000 of coverage. Let me explain what those are. So the employment practice liability is if an employee chooses to sue you,
Mm-hmm.
right, for discrimination in some way. And of course, cyber or data breach is if you have a ransom or your data is leaked, right? So the base policy could be $10,000 to $50,000 depending upon what the advisor puts on there. But
Mm-hmm.
the bank doesn't even address that. So if you just go in and say, I'm only going to do what the bank requires, you're really putting yourself at risk. I had a client buy an existing practice. He was right out of residency. So you're buying the practice, but you're also buying the problems of the practice as well as the
All right.
assets, right? He tried to introduce some new software and some new procedures. One of the employees had a really difficult time learning those new procedures, and he let her go, and he was sued for age discrimination within the first 6 months. And the employment practice liability insurance is there to protect you from those type of lawsuits. If he didn't have that, he would have been wiped out, totally wiped out. And same
Right.
thing with data breach. Data breach. I don't have to talk about it too much. People are very aware of it now. We had a client that, their computer system was taken ransom. They paid a lot of money to get it released, filed the claim. Insurance company reimbursed them for that ransom, and then also took care of, the credit monitoring for the patients, the LifeLock type of things, and
Right.
that also has a feature in there to help you if there's court costs as well. So that was a lot, I know, and I kind of rambled on, but I think that whenever you're looking at starting or buying, you want to sit down with somebody that's expert in this, that understands medicine and dentistry, and can understand both sides and give you the
Right.
complete picture to make sure you have a comprehensive protection plan in play. Um,
So
mhm,
So you mentioned business on the business ownership that you're putting the cybersecurity underneath there. One of the things that
mhm,
I hear all the time is or what I see advertised a lot to doctors and dentists and stuff is a cyber like special separate
mhm.
cybersecurity insurance. Is that just then to me with you saying that you're putting it underneath the business ownership umbrella?
Business owner,
I
business
are
owner's
you
policy, yeah.
yeah, you saying then
It's
that's more just a sales pitch to people to try to get, just to add on, or is it if they already have a business ownership policy, is it and it doesn't have cybersecurity, is that what they're trying to just you do it separately or what do you do?
so the business owner's policy, you'll see BOP as the
Mm-hmm.
acronym for it, has a baseline of both employment practice liability as well as data breach, right? But you can boost those up. It's kind of like, for lack of a better word, you could add a rider to make those features larger.
Okay.
And at one point, the market kind of fluctuates. During COVID, it was there were times that we couldn't get even 100,000. Now, depending upon the company, we can on that base underneath that business owner's policy package, if you will, we
Mm-hmm.
can get up to maybe $1 million of coverage for both the EPL or the data breach. If we want to go higher than that, we might need to look at a standalone policy to get higher limits. So you might be hearing advertisements for maybe a standalone policy.
Mm-hmm.
Or there might be carriers out there that we don't work with that don't provide anything above those minimums of 10 to 50,000, right? So I would have to know more about you know what they're advertising exactly, but I think now with the marketplace and the major carriers out there, we're in a pretty good position to just add the feature or increase it via rider, for lack of a better word, to get to the right kind of limits without going and adding a standalone policy. The caveat, of course, is if you're dealing with like a larger group practice or
Mm-hmm.
maybe a practice that stations themselves for DSO type of territory, then we
Right.
would look at standalone and getting much higher limits.
Okay. So I mean, yeah, it comes across
Hmm.
quite a bit. So
Yeah.
disability, I know is one that just to kind of go a
Hmm.
little bit more on that.
Yeah.
Um, disability is one of those that's always been a tough one, but yet, I see people skimp on that the most. For some reason, I don't know why. Especially when you have the stats of 1 out of every two. I know in the dental world, 1 out of every two dentists will have to leave their dental profession early because of a disability. I just met with a doctor last night and we were talking, and only 6 years into practice, and it started to have hand tremors. So he's now out. And now having to go back to school to, do something else to be able to, take care of his family. When it comes to that kind of stuff, what is it that well, let me give you another example. I also had a periodontist that I worked with for a long time, and his disability insurance he thought was covered 100%. And once he now had, an injury and so forth, it now becomes this, he's fighting for 6-7 months to get his disability insurance. So what are some of the triggers, I guess, or what are some of the things that people gotta, I mean, obviously come to you, right? And do it. But you know that you can't service every single doctor because they're gonna choose something else or go somewhere cheaper maybe. But at least if they're gonna look, what are they gonna, I mean, what should they be looking at in that contract that triggers them to sit there and say, before I sign on to this, this is a crap policy?
Yeah. So there's a few, we research, like I said in my intro, and always looking for best in class. And there's a few litmus tests to start out with. Number one, can the contract language, basically the rules that are laid out that determine how I get paid if I have an injury or illness, can they change, right? And there's a lot of contracts out there that might be offered by an association or an employer that is called a group contract.
Yep.
And in a group contract, the insurance company can change the language and raise the rates at any time, right? On a class-wide basis. They can't just do it to you, but they can do it to everybody that they insure.
Yep.
Our philosophy has always been that this is protecting your most important asset. So why would we put that at risk? So we recommend contracts that cannot change. So that's the first thing. And the technical term for that is non-cancelable guaranteed renewable, right? You see that. It just means that your contract and your premiums are going to stay the same till the full contract period at age 65. So once we check that box, I think it's important to evaluate the financial stability of the companies you're dealing with.
Okay.
Whenever if an insurance company has a financial rating, Moody's, Standard & Poor's, all that's saying is another company that rates you has come in and looked at your books, and they're giving you a rating based on your financial ability to pay future claims. That's their whole criteria for the rating, right?
Right.
Simplified down. So if we're looking at a company and it's a B rated or not at the highest ratings, and you look at another company, it's about the same cost, and it's an A rated, why would you ever buy the B, right? You want
Right.
to always make the best business decision possible with the information you have at the time you're making the decision. So I think it's really important to look at those ratings and context ratings, take all those confusing ratings out there, all those services, and put it all into an easy to use 0 to 100, 100 being the best rating system. So we'd want to have something always over a 90 because, they have a better chance, according to those ratings, to be in a financial position to pay future claims, right? So those two criteria bring it down to probably about 6 or 7 companies in the industry. And then we want own occupation that says if you can't perform your job, whether you're a clinical dentist or a cardiologist, whatever your job is, that's the criteria to get paid, that you'll receive your full benefit if you can't do that. And if you choose to do another job, you can make as much as you want to, and you still get paid your full check every month, right? So again, six or 7 companies, and then it comes down to if you land on those 6 or 7 companies, you're doing okay. But there's 2 or 3 that are just completely cost prohibitive when you spreadsheet them and look at them, and in our opinion, aren't bringing the value for the additional price. So it gets down to 3 or 4 core ones, and then we're getting into educating people about the nuances, right? So, but if you start with those, can the policy change? Is it non-cancelable, guaranteed renewable? Is it own occupation? You'll get down to a manageable list that you can evaluate, and hopefully you're talking to an advisor. One of the things that frustrates me about my industry is, especially in disability insurance, it's so confusing. It's so hard to have a transparent comparison from policy to policy. We looked at it there with one policy alone between all the different options. You could configure it up to 2 million different ways with one
Wow.
policy. And if you take that and say, okay, now I'm going to compare 6 policies, and am I really comparing all the same features as apples to apples as I can get them? And then I'm actually getting a premium that represents like a true comparison or not.
Right.
It's really difficult. So, you know, we we have it so that all of our advisors, nobody's commissioned on our team. They're geared up to give transparent advice, and there's no incentive. It's really about, these are the major companies. Here are the features. Here's the true pricing on a close to apples basis. What's right for you? And that's what you want to look for with an advisor, independent, client centric, that has the knowledge and ability to give that review for you.
So that in that situation where you said that, you know, that the language can't be changed and stuff, would that also constitute, because this periodontist I'm thinking about, his contract got bought out by another company.
Okay.
And so because that got bought out, then I'm assuming they must have, that first contract maybe allowed for there to be verbiage change, because that's where it happened. The old one, he was covered. The new one, they had different stuff that they got themselves out of it. Let's just put it that way.
It depends if it's a group policy and a new company bought it and changed the policy form. With the non-cancelable, guaranteed renewable companies out there, when another company buys the block of business, my experience has been that they're on the hook for honoring that original contract language for the full contract period.
Okay. All right.
Yeah. So
interesting, because I just, like I said, it's disability is one of those things where, you know, I can talk about it all the time, and it's very similar to the life insurance policies and stuff. And what I run into a lot of times with definitely the younger doctors coming out, but buying their first practices and stuff, even with the life insurance policies, it's always going after the association, you know,
that's
insurances and stuff that are just, I mean, they're just garbage, and they're only going to like 40, 45 years old and stuff. And I'm like, well, I mean, do you realize that by the time you're 45 and now you got to go for the rest of the insurance, you're going to be paying such a high premium? So I don't understand why that even exists.
Are they under the misconception that I'll be financially independent by the time I'm 50? You know, and then I talk with them and say, well, that's a great goal and it can happen, but how many dentists or doctors do you know that are not working at 50? You know what I mean? So let's really let's think about, insurance is about worst case scenario, not about best case scenario. So, and on the disability side, you know, it is such a vitally important thing that you understand the contract you have, but that you're working with somebody that can be there when you go to file a claim, right? We're filing claims from policies that were put in force over 30 years ago. We have a contingency plan for all of our clients. It's not just one advisor out there, and if they're gone, you have nobody to turn to. There's a terrific problem with orphan policies in my industry. And even if you're not an orphan and you have your agent still around, how many claims have they helped people file with an insurance company, and how can they assist you? We did, I think I was doing the research, and in 2022, our clients received over $40 million in disability claims alone. So we're dealing with claims a couple times a week, and we know the process. So deal with somebody that can say, we know the process. We're going to be here in 10 or 20 or 30 years. We can assist you. And you're not going to be by yourself in this if and when you need to use it. So
the other big one is, and since you guys have it, is I get questions, our coaches and everybody gets questions all the time too, is okay, staff, right? The team, and how hard it is to find them. Should I offer benefits? Different things like that. In the benefits package always comes up. And maybe I want to down the road, blah, blah, blah. what is it? Just give me a brief understanding of like when it comes to like the retirement and and employee benefit packages. What are some of the more common, and what are the ones that that you like for them to know that they can get into that game, I guess?
Yeah, I think, the first thing that comes to mind when it comes to what can benefit both the owner and the employee, it's, putting in a qualified retirement plan, right? Because that is after you invest in your practice, which is the best investment you can make because it's creating more income, and you've got it to the point that you have a positive and consistent cash flow and a surplus. Now, how do we reduce taxes and save money for the long run and provide a benefit for your employees? So you start to look at the qualified plans. And there's basically two different qualified plans. There is um, defined contribution plans and defined benefit plans. Defined contribution plans are what most of us are aware of, like the 401k, for example. It's defining how much you can contribute into an account every year, right? So that's going to be the first step to look at. And whenever you set that up, you do a census and you list your ages and your staff ages, their start date, their incomes. Then an actuary looks at it and says, okay, based on your demographics and the testing, here's how much you can put into your account, and here's how much you're into their accounts with their own money from their paycheck. But then here's how much you would need to put in as a benefit to both your account and the employee's accounts, right? Mm-hmm. So you go through that exercise, and typically, you're saving presumably about 40% in taxes, right? By doing whenever you deduct your contributions. So the litmus test that we look at is if your staff contributions are lower than the tax savings are close, then it's a no-brainer. Why wouldn't you do a benefit for you, a benefit for your staff, right? Especially when, because of the cost savings, is costing you from a tax perspective, is costing you very little. And it's a really nice way to help retain employees and build your net worth up, right? So that's the first step. And then the most common is called a safe harbor 401k. Mm-hmm. The owner of a practice can put, depending upon the year, it's moving a little bit somewhere. I think it's 66,000 this year, something like that, depending upon if you're over 50, into your account, and then you need to put money into their accounts. If you've done that and there's still surplus and you have the ability to save more money, then you have the defined benefit plan. And basically, you keep the 401k, and then on top of that, you can put a defined benefit plan. Once again, you have an actuary, typically a more sophisticated one, because they actually have to do some reverse engineering and testing, some actuarial testing for a defined benefit plan. But that can go on top of your 401k, can provide added benefits to you as well as to your employees, added pre-tax savings. And we have people putting up to well over $100,000 more away into their account, mm-hmm. and then still having the benefit of all that tax deduction and still being able to do money into their staff's account as an added benefit. So those are the two ones to look at. I would say you want to be a little bit more of a mature practice when you look at the defined benefit, but absolutely, the defined contribution safe harbor 401k plan. I mean, that should be something that should be evaluated as soon as you have surplus and cash flow to do it. It's kind of a no-brainer as long as the numbers work.
And then is that something that, as far as in, like, if a new buyer was going into a practice, mm-hmm. And of course there's cash flow there, mm-hmm. is there like a range, or is there any type of thing that they should be looking at? I'm just thinking of this buyer that I'm working with right now. If there's $200,000-$300,000 for the cash flow, is there something that you feel is like a trigger to say I'm ready to be able to bring that in?
I mean, I think it's really, if they don't do it right, and there's not an expense, they're taking that money as income after taxes, right? Mm-hmm. So really, it's just, do you need that for lifestyle needs, your income? And if because either you're gonna clear it out, do your taxes, pay the taxes on it, and then it's going to be used for for your personal lifestyle needs, right? And
Right.
then maybe you invest it after taxes, um, or you can take it and not take it out and put it in pre-tax and not be taxed on that money. So if you have the income coming through that you are comfortable and you can satisfy your lifestyle, right? And then there's a surplus. I mean, you probably want to have, I don't know, $100,000 depending upon the size of the practice. If I was a solo doc and I had 4 or 5 employees, that'd probably be a really, really safe number to say,
Mhm.
hey, this is how much that I don't need. Let me look at redirecting that into like a safe harbor 401k or a defined contribution plan of some sort so that I get the tax benefits and my staff gets some benefits as well. You know, um, After that, then, the defined benefit plan is kind of a similar thought. Okay, now you're really cooking. Practice is doing really well. Why are we paying all these taxes? Can we do another plan on top to take advantage of some tax advantage savings and provide a little bit more benefits to your staff? You
Okay.
know,
Yeah. So
yeah.
one last question, and that is which I know I mean, as a business owner, I get talked to about all the time too and stuff, but just wondering as far as in your opinion, long term, care insurance.
Mhm.
What I mean, something that you feel is necessary, something that is, I mean, because I just look at the new average age for for a dentist at least is now moved to 73.2 before
Mhm.
they retire. So
Mhm.
I always get you know, I always get those comments of I don't need that, I'm planning on working until I'm, 75, blah blah blah. I mean, what's your view on that as far as in like
Well,
up to the person, or I mean,
I tell you, people that have been through it personally and have had to navigate the waters of finding care and paying for care typically want some type of protection, right? And the claims are consistent. I got long-term care insurance. I'm in the industry, so I got it when I was like 38. Believe it or not,
mhm,
I'm really glad I have it. It's in force and it's there for me. But I just think about with longevity and healthcare improvements, we're going to be living longer, and we're going to be living longer with on the back end with uh, with health issues where we might need care,
right,
right?
yeah,
And we have no idea what kind of cost that will involve, and we really have no idea what kind of challenges or headwinds we're going to see with the returns of your investments, right,
hmm
over the long run. So I think that there's basically three classifications of wealth, right? The high net worth. There's high net worth. There's high net worth, very high, then what ultra. You know, Unless you're in the ultra category, you probably would like to have a stopgap. And that ultra is like $30 million and higher. I think you
oh,
want to have a
gee.
stop. I think you want to have a stopgap of some sort to help take care of some of those costs, especially a married couple. I don't think it has much to do with how long you're working. It really is, first of all, we have people that have strokes in their 40s and they
Yep.
need care. No one thinks about that. But the more likely thing is what we picture, the 85-year-old, grandfather or grandmother needing to use care. And now it's, you know, $15,000 a month, you
Yeah.
know. So my thought is that the industry has changed. They have some pretty innovative products now that are not the old traditional policy you just buy for long-term care and that's it. The policies are more of a hybrid now where you have a death benefit, a cash value, and the long-term care available. So if you buy a policy like that, you're going to get a benefit somehow, right? And you
Right.
should look at, you know, how do we plan for this? And isn't it smart to take some of our assets and put it in a place that will provide protection for the largest risk that we have looming after retirement?
Yeah.
You know,
I mean,
I just don't think our doctors and dentists typically, there's some outliers, typically don't get to that level of net worth where they have no care about that potential exposure.
I would agree with you on that one.
Mhm. I hope they do. I love it. I mean, we do a lot of investing and we do a lot of financial planning for them, and that's the goal. But the incomes typically aren't there. You can only do too much with two hands or and a few associates.
Right.
Right.
Yeah,
Mm-hmm.
absolutely. Well,
So,
I mean, I could talk some more, and then basically definitely going to have you back on because there's some more things I'd like to drill down on with you even more on those malpractice. We didn't even get a chance to talk about that and so forth. So
sure.
definitely have you back again. But for everybody else, I know that as we always do with our podcast, we'll have your information on there and stuff. But someone that's listening that just wants to immediately check you out and to be able to get a hold of you, what's the best way to get a hold of you, Shawn?
Sure. So we still have our old toll-free number, and they can find myself or any one of our advisors nationally at 800-345-6040. My email directly is sjohnson, so first initial, last name, and this is where it gets tricky, at Treloar, T as in Tom, RELOAR, online.com. And that's also the website address. So hop on the website. There's a lot of great material there to go through as well.
Awesome. Well, as everybody knows, we got some amazing information today from Shawn, and definitely helped me to be able to hit that even harder, that disability. I think it's just so important because it's just one of those things where everybody chimps on that one, and yet it's something that is. I talk to the older doctors so much that run into it, and like I said, just talking with somebody that was very, very young, 5 years out, and had that, happen to them. It's so common. I just don't think dentists and doctors understand how common that is. So, hearing what you had to have was awesome. And so we'll have you back because like I said, I want to get into the malpractice, which is another hot topic for us. So I really, really want to thank you for helping us out today. If you enjoy our show, please rate, review us on Apple, Spotify, or wherever you get your podcasts. I'm Phil Cole, and I want to thank everybody for listening to us today.